Today we are diving into the story of a small Japanese company that's making one of the boldest and maybe one of the riskiest corporate bets I've ever seen. It is a wild story about desperation, about ambition, and a massive, massive pivot into cryptocurrency. So let me just ask you this right up top. Would you bet your entire company's future on Bitcoin? I don't mean just, investing a little bit of spare cash. I mean fundamentally re-architecting your entire financial strategy to go all in. Well, believe it or not, that's exactly what one company is doing right now. And they are not messing around. They are raising a truly massive amount of money to make this happen, a potential 6.8 billion yen. Just to put that in perspective for you, that's over 40 million US dollars. So, let's break down how a company even gets to a point where a move like this seems like the best idea.
Okay, so the company at the heart of all this is called Science, and they have decided to raise all of this cash for one single purpose: to buy Bitcoin and hold it on their balance sheet. And let me be clear, this isn't some side project for them, this is their new core financial strategy.
What's really striking to me here is the company's official reasoning. They aren't treating Bitcoin like some speculative asset they're going to flip. Nope. They're framing it as a strategic treasury asset. They're calling it digital gold. Their whole stated goal is to shield the company from inflation and get away from relying so much on the yen. It's a total reinvention.
So, that leads to the really obvious question, right? Why? Why would any company make such a dramatic, risky pivot? Well, to really get that, we need to take a hard look at the state of their actual business.
And the second you look at the numbers, the problem just jumps right off the page. In the first quarter of their fiscal year, Science brought in about 159 million yen in sales, but they posted an operating loss of 102 million yen. To put it simply, their day-to-day business isn't making any money. It's actually burning through it. And that's just not sustainable. So where's that loss coming from? Well, you can see here, the company is almost totally dependent on one single struggling business. Over 98% of their revenue comes from their nickel business, which has been getting hammered by falling prices. Meanwhile, their other ventures in real estate, education, they're generating basically nothing. This is a huge, huge concentration risk.
And look, they know it. They're not trying to hide it. This quote is a direct admission, word for word, from their own financial reports. They're telling everyone very clearly that their current business model is broken. When you see a company saying that about itself, you just know a drastic change is coming. For Science, that change wasn't a new product. It was a whole new kind of money.
So how on earth does a struggling company plan to raise billions of yen? Well, that involves a pretty complex financial toolkit, but the core idea, honestly, it's simpler than it looks. Let's decode it. Okay, so the main tool they're using here is something called a stock warrant. And really, the easiest way to think about this is like a long-term coupon. An investor buys this coupon today, and it gives them the right, but not the requirement, to purchase company stock at a locked-in price sometime in the future. It's a way for companies to raise cash now based on the future potential of their stock.
Now, Science is actually issuing two different flavors of these coupons. You can think of one as the workhorse. It's designed with flexible pricing to make sure a steady stream of cash is always coming into the company. The other one gives Science a little more control, letting them adjust the price to make it more attractive for investors. The bottom line is they're using two different tools to make sure they get the money they need no matter which way the stock price moves.
So the entire grand plan really just boils down to these three steps. First, they issue these warrants plus an initial bond to their investors. Second, as those investors use their warrants over the next few years, Science gets a steady flow of cash. And third, they take that cash and use it to buy Bitcoin for their corporate piggy bank. It's simple in theory, but incredibly bold in practice.
But here's the thing. To make a bet this huge, you need everyone pulling in the same direction. And the company has come up with a fascinating way to make sure its own leadership has some serious skin in the game. This isn't just a bet for the shareholders. Oh no, management is locked in right there with them. The company gave its own executives stock options using this really powerful carrot and stick structure. The carrot is pretty simple. They can only cash in on their options if they drive the stock price way up, over 150% of the exercise price. But the stick, wow, the stick is something else. If the stock price completely collapses, if it falls below 50% of the exercise price for 5 days in a row, the executives are forced to buy the stock. They have to buy it as it's plummeting, sharing that direct financial pain with every single other shareholder. It's one of the sharpest tools for management accountability I have ever come across. So when you put it all together, a struggling company, a massive fundraising plan, and a huge bet on a super volatile asset,
What are the actual stakes, especially for the people who already own a piece of this company?
First, we have to talk about dilution. To raise all this money, Science has to create a lot of potential new shares. And if all these warrants get exercised, it could create over 55 million new shares. That would increase the total share count by almost 40%. For anyone who's already a shareholder, that means their slice of the company pie is about to get a whole lot smaller.
And ultimately, this all leads to two very, very different futures for the company. It is a true binary outcome. On one hand, the upside. If Bitcoin's value skyrockets, Science's balance sheet could be totally transformed. They could go from a struggling little nickel company to a true pioneer in corporate crypto strategy. But the downside is just as extreme. If Bitcoin's price collapses, the company's main asset gets wiped out, and shareholders are left holding a much smaller piece of a company whose massive gamble just blew up in their face.
And this brings us to the final, really big question. Sure, Science is a small company taking a huge risk, but they're not the first to put Bitcoin on their balance sheet. So is this just an anomaly, a wild move born out of pure desperation? Or are we getting a glimpse into the future of corporate finance where digital assets become a standard tool for companies to manage risk and store value? That right there is the billion-yen question.